spirit, and looking forward to our discussion.
Yeah, look, well, I'll start off by saying congratulations, you're finally in the green. Like many of us here, it has been what seems like a very long crypto winter, but it's been a great few weeks. And look, for those who have dollar-costed averaged into the market over this, this winter, we finally are in the green. And what we want to know from you is, you've done very well, you're finally in the green. Will you continue to buy Bitcoin, or will you just hold your current position?
You can never have enough Bitcoin. I think the right way to think of this is Bitcoin is going to grow in a serpentine pattern with rapid burst of growth, some drawdown, but on an exponential curve. Right now it's like 45 or 50% compounded annual growth for the past 3.5 years since we got involved. And I think it will just continue to grow at a high growth rate between 20 and 40 or 20 and 50% for the next 1 to 2 decades. And it will gradually, the overall long-term growth will probably go from 45% annual to 40 to 35 to 30 to 25 to 20. And it'll hit a terminal growth rate of like 15%. And when it hits that terminal growth rate, maybe 20 years out, maybe 25 years out, it'll be growing twice as fast or compounding twice as fast as the S&P index or any other diversified, high-quality portfolio of assets you could buy. So if you think about it like that, you just say, well, where we are now, we're going to double again, we're going to double again, we're going to double again. Bitcoin's going to continue to progress to $1 million a coin, $2 million a coin, $5 million a coin, $10 million a coin. And when it's $6 million a coin, there's going to be a bunch of people really angry at themselves that they didn't buy it at $1 million a coin. And so I think once you understand it to be the center of the financial universe, right? It's basically the fulcrum around which we all generate leverage. It is the frame of reference of all value and scarcity. Once you get that idea, then the logical thing to do is just to continue to sweep your cash flows into it from month to month, to quarter to year to year. You could call that dollar cost averaging, or you could just call it, savings. But, there's no end in sight. I mean, if I told you you could buy Bitcoin at 100,000 and it was going to go to 6 million, and you were going to get 60x your money, then why wouldn't you?
Is that financial advice?
I am an advocate of Bitcoin.
But we'll move on to the next question, and there's an auditorium here of maybe 1,500 people, and some of those, I would assume, are big followers of yours and probably watched all your YouTube videos like I have. But I really want to talk to you about your Bitcoin and property analogy, and there's probably some new people here who haven't heard you talk about this, so I'm going to go down this path, and I love listening to you do this. So you've stated that Bitcoin is the best property in the world. Can you elaborate on that, and what makes Bitcoin the superior asset compared to traditional forms of property, and how this perspective has influenced MicroStrategy's investment in Bitcoin?
Sure. Well, when you think about investments that you're going to hold a long period of time, the two that stick out are, should I buy a diversified portfolio of companies like the S&P index, or should I buy a bunch of real estate? And if you buy real estate, like real estate in Miami Beach went from $10,000 an acre to $10 million an acre in less than 100 years. So that works out to be a 7 to 8% growth rate per year, every year for 100 years. And if you have that perfect portfolio of stocks and they're very competitive, then you might get something similar. But when you look at it, investing in stocks is very complicated. Like, name a company that'll still be here in 100 years. Like, how do you establish the S&P index? So if you take a 3-generation or a multi-generational view, it's kind of hard to figure out how I would buy a bunch of companies and hold them 100 years. But on the other hand, holding property for 100 years is very straightforward. You know, the royal family of Japan, or the royal family in the UK, or royal families in the Middle East, they just buy up all the best property and keep it for hundreds of years, right? How long has the British royal family had the center of London? 500 years, 1,000 years, right? The emperors had the center of Tokyo, 1,000 years. So holding the middle of Manhattan, or holding, if I could basically, you remember, I walked through the botanical gardens in Sydney, and I thought it's the most beautiful thing. What if you could own it? Like, what if you could own that entire garden? I don't know, what is it, 50 acres? It's spectacular. Would you ever sell it? Probably not. You know, you would probably keep it.
afford to buy it now.
Yeah, but you know, like 500 years ago, right? Someone came along and it was there, and so now property is a good investment, and the reason property goes up by a factor of 1,000 is because if you look at it, what you realize is politicians can't make more of it. You can't print more property. The garden is the garden. The Sydney Harbor is the Sydney Harbor. You're not going to wake up and find out that there's 100x as much beachfront property as there used to be. So when the money supply expands by a factor of 100, and the number of acres on the beach in Miami Beach stays the same, the price per acre goes up by 100. And that's why property is a good investment. The problem with property is you have to buy it in chunks of buildings at a time or acres at a time, and sometimes the best property isn't available for sale. The second problem is there's property tax. So if you owned all the property in the middle of Sydney, you're going to get taxed on it by the mayor and by the province and by the country. And a lot of times people can't afford to pay the property tax for 100 years. And then if someone zones your property, or if there's a war, what if you owned the nicest property in the middle of a war zone? What if you owned all of the nicest property in Ukraine, in Kiev, right? It might be devalued by the war. It could be devalued by a pandemic, by an earthquake, by a tsunami, by a tax. And you know, if I handed you $10 million and you lived in Africa, and you had a choice, buy $10 million worth of property in Zimbabwe, anything in Zimbabwe for $10 million. You can pick anything you want in the entire country and buy it for $10 million. Or would you rather buy Bitcoin, $10 million worth of it? Well, the property in Zimbabwe, maybe it's scarce, but it could be impaired and it's not mobile. And maybe you don't want to live there. And maybe the people with the money in 100 years don't want to move there. So it's not clear that you'll be able to mortgage it or rent it or sell it or carry it with you. But on the other hand, Bitcoin is capped. Bitcoin is like Manhattan in cyberspace. It's 21 million city blocks in a cyber Manhattan, and one day 8 billion people will want to live there because everybody in the world, all 8 billion people in the world want to be wealthy. They all want to keep their money. There's no one that doesn't want Social Security and economic well-being. Not from now to the end of eternity. For 1,000 years, people are going to want the money. So if I created the most stable, most secure, most immutable crypto asset network of 21 million blocks, and everybody in the world understood it, they're all going to want a piece of it. There's only 21 million blocks, and a lot of it's been lost. So probably we're down to 16 or 17 million Bitcoin. And the thing about Bitcoin, which is better than property, is A, it's scarce, but B, it keeps getting more scarce. When people lose their keys, there's less Bitcoin, not more, and it's mobile, and it's portable, and it's fungible, and it passes what I call the Bernard-Arnault test, which is if you want to make a good investment, you should buy something scarce and desirable that someone richer than you and more cultured than you and smarter than you will want to buy from you in a decade.